traders, what up investors? Ken here from Dyslexic Investor, and thank you for tuning in to another fantastic video. Today we're going to be looking at ticker symbol VUZI. Of course, this is a Cathie stock. I know a good friend of mine, Dave, and then also Ryan within the Discord chat have talked about this one extensively, being one of Cathie Wood's buy the dip kind of moments in the last toward the end of February until the early part of March here. They just had earnings. The stock is gone like gangbusters. Before we dive into all the fun stuff and everything, I just have to have two quick clips of just a joking matter of VUZI display glasses to kind of create the thesis of where we could see the stock go. So go ahead, roll the clip, Kevin. Roll the clip.
Sending intel to your HUD right now. I'll be your boots on the ground, sir. Okay, switching to plan B.
See? Isn't that fantastic? Again, completely joking. That was from the new fantastic Marvel series of Falcon and the Winter Soldier. Definitely check it out. That's on Disney Plus. Disney stock, another love that one as well. Anyways, we're talking about VUZI here. Of course, if you look at the chart here in a second, it's going to be fantastic. But this is kind of just gives you a runaround of what's going on. So again, the shares dropped sharply after Maxman downgraded the valuation concerns of the stock. Didn't really care too much about it. Again, that was on the 16th of March, so just the beginning of this week. You see again with that market pullback coming in through here as well. So again, what does the company do? So they basically make these HUD glasses. It's a little bit higher step up than their various sections that you saw with like Google glasses, basically allowing to create this HUD on multiple different interfaces from educational enterprise. They go into different military factors, manufacturing, surgical, medical, all these kind of things are very much going to be giving the human, us, the robotic or cyborg kind of advantage on more information, more safety, and so forth. Again, very much like newy cutting edge kind of things. This is not like it's basically just something to be really interesting about. So again, they kind of highlight some things here again, the future of all the stuff's going on. Anywho, with that note, again, this has been a very large run in the stock here coming in today. If we go over to Thinkorswim here, of course, I kind of want to highlight this again. Everyone's just saying reduce, sell, it's overvalued, blah, blah, blah. But that's again, that's to everyone's note. That's more fundamental value traders out there than they are like real true growth folks and momentum folks. On the same note, if we look at the chart here, like, we almost hit $30 today, so that's going to be a very substantial level. Again, on the 16th, again, this is that little downtick today. On that day, it did pull back to below $20. Again, that was right after earnings. With a large move higher, the overall trend has not been broken since then. Really large cup with handle here, and seeing it really break past that $24 range and just really just shooting off into the stratosphere here. At this point, is it overvalued? I don't know on the fundamental level. I'm not the world's greatest analyst on that sense. On the squeeze and the potential level, if you bought in here around $17, $18, again, depending on what your time horizon is on the stock, if you're looking to invest in this 3 or 4 years out, you shouldn't be listening to this. This is more like intraday swinging in the sense of maybe 2 or 3 weeks, or even maybe a couple months here. What we're looking at this fine-tuned chart here, because again, this stock is just potentially just getting up on its run because again, this stock was under $1 this time last year. So to kind of give that in full perspective there. Is it be overvalued? Yes. I think most value investors are going to be looking at that sense of like, hey, revenues are growing and all these other factors, but there's a certain part of the market and the stock that's kind of disconnected from the company, which does happen time to time where the stock potentially could get ahead of itself, which I'm not saying it's here again. The very large, again, institutional buying of ARK is a very good, like a stamp of approval of really giving this the potential, the momentum to go. Of course, a lot of people do follow and enjoy Cathie Wood's due diligence and work on a lot of the stocks, but I think most people would need to do their own DD or due diligence to really build a really strong factor. But anyways, if you did take the trade and you bought the momentum on the downward the last week or two, when Cathie was buying, that just today, you're up 18%. So little kudos, a little round of applause for everyone who took that trade. We give you a nice little chest bump there, a little like a kudos, a thumbs up. Say, let's give you a nice little thumbs up here and say, very nice. Yeah, I like it a lot. High five. So yeah, fantastic looking trade. So when people are talking that things have been being overvalued in the short term, I really want to kind of come down to the RSI and the volumes on Oscar. That basically could potentially tell you to a certain extent if this is overvalued in the short term on the stock basis. I'm not talking about the company, the financial things like that. Looking strictly at the chart here, the move has been pretty substantial here. We're seeing a lot of volume in the last 2 days, pushing it up and having three large aggressive green days, but not having a gap up, which is still pretty impressive here. We're seeing this potentially again. The RSI is at 70, so it's at its first kind of potential benchmark, and the volumes on Oscar is pretty much at the higher end as well. As like this potentially could be a good area to take profits again. Trade your own plan. If I bought this at $17, $18 and I bought it, let's say 1,000 shares or whatever, I would potentially want to cut some in this range here, maybe taking 50 to 60% off, and then being a little bit more aggressive and greedy with the remaining of the shares, but making sure I protect the capital. I paid myself a little bit, and that's the way on how I trade. Again, more people can just YOLO and add more up here. That's not my kind of cup of tea. Again, this stock was $1 just a year ago, and we're seeing this again. That's in a very aggressive move higher. So I really do understand on how some people are like, hey, valuations are getting a little bit out of hand. We did see that overall market pullback with a lot of the NASDAQ stocks really getting hit, and just really seeing some aggressive selling, especially within the high growth SPAC kind of speculative names. This one did kind of participate a little bit, again, hitting that $24, $25 range and then pulling back basically all the way down to 13. So just that little haircut right there was basically a 48% move back down in about 3 or 4 days. So it did participate in that, but it rebounded phenomenally. By phenomenally, I mean it held that 50 SMA here around that $13 range and just skyrocketed here and really took it to a whole nother level. So that is, where could we see this be going? We can do some very basic Fibonacci levels here in the short term. So looking at the swing high to swing low that we saw, that market correction, look at that. It hit the 1272 extension. It's 29.68. It hit 29.59. Okay, so it missed it by about 9 cents. That's going to be a very key Fibonacci level. Of course, that 100% move is going to be another level. If the momentum wants to continue and we see the squeeze and the volume potentially kick higher with a little bit more juice left in the RSI, potentially to see on how the strength holds up, the next level we're going to be looking for is around $34.32. That's going to be the next potential level that we could see move higher into this range here if we do see the overall market really kind of still kind of push these various stocks up again. If Cathie Wood goes out and you see Cathie Wood buy today, I think that we can easily see that run up. But again, her time horizon is not a couple weeks. It's more looking at a longer spectrum of years. So, but things do change. But again, you have to be flexible within your trading plan. If the situation or new information does occur, you have to be very flexible to get out. At that note, where could we be looking for some support to the downside? Initially, the $26 range, but a better range would be around that $22.30 to $23.23. It's between, that's the substantial short-term support. If we do get a pullback, again, that is, I know that seems quite far off from where it's currently trading around $28, but that's going to be the very first significant level if support to the downside around the 8 EMA on the daily chart. The next level we're going to be looking and highlighting at would be basically the 21 to 34 EMA. Those are the levels that I potentially always like to buy on the momentum side of things if we do get a pullback. So that 1940 to, that's a great year, not to 1786 could be those levels to potentially see. And of course, we saw previously the 50 SMA hold here onto that, a very aggressive downward pull. So be mindful about that and seeing if that does hold. So Ladies and gentlemen, I hope you enjoyed this video. If you did, please hit the like and subscribe on the way out the door. Check the affiliate links down below and the Discord link, and I hope to see you guys on the next live stream. Peace.